If they were to adopt and embed Bitcoin into their product, they could deliver a compelling offering to billions of people. And I think it'd be worth hundreds of billions, if not trillions of dollars to Meta. So the answer to Meta's problem on the revenue and the P&L side is embed Bitcoin and Lightning into their product line.
Have you been frustrated with the price action in Bitcoin so far this year?
Now, my time horizon is a decade or more. The answer to your question, by the way, as to what you do with your Bitcoin is you hodl your Bitcoin. We're hanging out. People buy Bitcoin because they want to buy an asset that they understand that might have value in 100 years. And the truth is there's no security trading on the NASDAQ or the New York Stock Exchange right now that you can understand 100 years from now. We got a long time horizon. And so, this is near term. There's a lot of risk off volatility, but I don't think that bothers any true Bitcoiner.
And we know that you are a true Bitcoiner, of course, Michael, because we've talked to you about it, of course. You tweet about it. You've put it on the books at your company and on in your personal accounts as well. I would ask, though, when an individual buys Bitcoin and it goes down, it has an effect. When you put it on your balance sheet and it goes down, it costs you, right? It costs you in terms of the accounting for your company because you get penalized when it goes down, but you don't benefit when it goes up until you sell it.
Go ahead. Your question?
What do you think accounting rules need to change on that front?
Indefinite intangible accounting means that you can only mark it down. You can never mark it up. And in truth, I'd be better off from an accounting point of view to buy a stack of comic books or baseball cards because I would only be evaluating them for impairment once a year as opposed to every minute on a Saturday night while people are skittish about a risk-off trade. So I think that the gap accounting isn't a positive factor for a company that relies heavily on it. I believe that FASB's taken this up as an issue. We'll see what they say. Clearly, it would be better if there were fair value accounting for a publicly traded company. And if we ever see a transition from indefinite intangible to fair value accounting, that would be a catalyst for more corporate adoption of Bitcoin.
But could it also, in a sense, allow companies who are going to add Bitcoin to their balance sheets to sort of quote unquote cook their books or to make things look better than they are? I guess you could argue on the flip side, things maybe look worse for MicroStrategy than they are right now because of that other accounting.
With the current accounting for when Berkshire Hathaway accounts for their ownership of Apple stock, they do it via fair value accounting. So I think that either accounting is appropriate if everybody agrees that's what they're going to do, and then the accountants close the books at the quarter and they account for the assets based upon that guiding set of principles.
Michael, do you see yourself, despite any accounting issues as it pertains to how you account for Bitcoin, do you still see yourself using leverage at some point to go out there and launch more Bitcoin products and perhaps change your strategy at the company?
We have used leverage, and if you could borrow money at 1% interest or 2 or 3% interest, and if you thought that assets were going to appreciate at a dramatically higher rate, then it makes total sense. I think we're in an inflationary environment. The Argentine peso has lost 93% of its value over 4 years. In Lebanon, they've lost 93% of their currency value almost overnight. In environments like that, it's almost criminal not to use leverage. You should borrow in the local currency, and then you should buy a stronger asset. In the United States, I think you can expect a 15% or more monetary inflation rate for the coming few years. So if you could borrow money at substantially less than 15%, then your arbitrage is clear and obvious. So yeah, we think it's a good idea if properly used. It all comes down to the terms and conditions. With all leverage, I would not recommend anybody go and go long Bitcoin 20-1 in a mark-to-market margin loan situation. You're going to get wiped out. But if you have the ability to mortgage your house for 30 years for 2.5% interest, and if you knew that the currency was going to lose 15% of its value a year, then by all means, you ought to buy a house with mortgage. And if you have a house that's unmortgaged, then drawing down a credit line against that real estate in order to invest in a tangible, scarce, desirable asset that's going to appreciate in value at a much higher rate is a rational business decision.
Michael, before we let you go, as someone that has used Bitcoin to diversify their business, look what we're seeing out of Meta this morning here. Challenging quarter. Now, they announced recently they're getting out of the crypto space. Was that a mistake for them? Because if they added Bitcoin into their business and built that out, theoretically, maybe they would be able to just avoid some of these Apple privacy issues and just report better earnings.
Well, to be clear, I think the mistake was not getting into the crypto space. Meta pursued a DM project, and that wasted many, many years of their time. If they were to adopt and embed Bitcoin into their product, they could deliver a compelling offering to billions of people. And I think it'd be worth hundreds of billions, if not trillions of dollars to Meta. So the answer to Meta's problem on the revenue and the P&L side is embed Bitcoin and Lightning into their product line. And the answer to the problem of how do you make cyberspace more secure and improve the quality of your products is to embed Bitcoin and Lightning into your product line. I have 10,000 Instagram bots in my DM, and they're not real people. They attack me. You can't really trust anyone that communicates with you in cyberspace. You can't trust scammers coming at you in WhatsApp. Every day I have dozens of WhatsApp bots attacking me. So if you want to clean up WhatsApp, if you want to clean up Instagram, if you want to make Facebook, and for that matter, YouTube and Twitter safe for children and safe for the world, you ought to wrap those personas in a layer of digital energy, and that would be Bitcoin on Lightning. And, Meta's solution is, Jack Dorsey pointed this out. He said, if Bitcoin had existed when Twitter was founded, they wouldn't be so reliant upon advertising, and you wouldn't have this surveillance capitalism problem. Meta's solution is to go from a pure ad model to a value creation model where they become a bank in cyberspace. There's no reason why they couldn't accumulate $1 to $10 trillion of assets on their cloud platform if they built Bitcoin and Lightning into their product line. So I think that's the solution to the problem. They have not embraced Bitcoin. That's the problem.
All right, let's leave it there. MicroStrategy CEO Michael Saylor, always good to get some time with you. We'll talk to you soon.